Manufacturing accounting, manufacturing account, manufacturing accounting, manufacturing accounts. See, we have considered the trading concern, but now we are going to deal with the manufacturing concern. A trader purchases finished goods and sells the finished goods, that's all. But in case of manufacturer, he purchases the raw material and raw material is converted into finished goods in the factory. Later on, that finished goods is going to be sold. Conversion will be happening here. Okay, this is what about the conversion. Now you have to calculate what is the cost for converting and making it to finished goods. For that, yeah, of course, you have to take the raw material cost. You need to add the conversion cost also. Then it becomes the cost of goods produced. So cost of production, cost of production. In case of trader, he will have only finished goods stock. In case of manufacturer, he will have inventory being raw material form, finished goods form, and it may be in semi-processed form named as work in progress inventory. 3 forms of inventories will be there. Clear? Now it's your duty to find out what is the cost of the finished goods produced, which is meant for sale, right? That will be calculated by preparing manufacturing code, where we have the raw material cost as well as the conversion cost. It includes direct wages, direct labor or wages, and some production overhead amount spent for producing the raw material into or converting the raw material to finished goods. These are the costs are going to be added and we'll get the cost of production. Thereafter, trading section and the profit and loss section will be as usual. Okay. So in case of income statement, you prepare the income statement like trading section and financial P&L account section and financial position. All these things are same. Before that, we need to prepare this part. This part is the additional one that you have to understand in case of manufacturing entity. So material cost, this will be the material cost. Usually in trading section, you purchase a finished goods and sell the finished goods. Opening inventory plus purchases minus closing inventory will be the cost of sales. In case of manufacturing account, it is all about raw material consumed and cost for that. Opening inventory, purchase of raw material, less closing inventory of raw material, which is called raw material consumption. So first you have to consider the consumption. And whenever you spend the money for transporting the goods to your place, like carriage and purchase or carriage inward, will also be forming part of the material cost only. We got this. With that, direct wages and direct expenses. To manufacture, sometimes other than material and wages, also we need to spend money like royalty. That will also be forming part of the cost. If you add up all these things, that is called primary cost, named as prime cost. With that, production overhead or expenses incurred in the factory will be addable. Those things are indirect wages, insurance of any machines, rent and rates for the factory or machines, general expenses related to the factory, depreciation related to the machinery. All these things are going to be considered as factory overheads. Add this, then you have to add opening work in progress with that, subtract the closing work in progress, finally you will get the cost of production. Okay, you will get the cost of production. Thereafter, you can go for the trading section. Revenue and cost of sales. Opening inventory of finished goods will be there, and rather than you purchase it from outside, you already manufactured in your factory. That cost of production will be now included here. And any other purchases apart from the production, you may still purchase some finished goods from outside. That should also be addable. Minus closing inventory will be the cost of sales, and from the cost of sales you can after subtracting the cost of sales from the revenue, you can get the gross profit. Thereafter, of course, you can prepare the profit and loss section also to find out the profit for the year as usual. Okay, and calculation of unit cost. So sometimes after the production, you may need to find out what is the cost of production per unit. Overall cost of production divided by number of units produced will be cost per unit. So these are the formats you have to understand. So before you begin manufacturing count is for manufacturing entities who prepares this enterprises engaged in manufacturing activities. What is the purpose? Ascertain the cost of goods manufactured, otherwise cost of production. And closing entry, cost of goods manufactured is transferred to trading section. Okay, this amount is transferable to trading section, that will be called as a closing entry. And stocks considered in manufacturing count, raw material as well as work in progress stocks are going to be considered, and finished goods will be a part of trading section, so it will not be considered here. And then prime cost you will arrive with that. Factory overhead is added to find out the cost of production. And ensure proper treatment of direct expenses and overheads. That's a very important point here. Okay, we'll see along with some illustrations here. Then income preparation, income statement will be similar to the income statement you have studied in financial statement chapter. And in case of balance sheet, the format will be same, but in case of current assets, as he is being the manufacturer, he will have three forms of stocks: inventories, raw material, work in progress, as well as finished goods. Is that clear? This is the format for manufacturing account, and of course rest will be the same. And in trading section, you have to add the cost of production also apart from the purchased item. And unit cost. Grace owns a factory which makes shoes. She buys handbags from supplier and sells shoes and handbags. So shoe is made and handbags are bought. For handbags, Grace may be traded. For this is the manufacturer. And ledger account balances included the following items. So we have to prepare manufacturing account. I think, let's see what are the things are going to be prepared. Prepare Grace manufacturing account only. And we have been given inventories also. As he is being the manufacturer, he will have three kinds of inventories: raw material, work in progress, finished goods. And apart from that, three more adjustments also be given here. I have to incorporate all these things. Rent and insurance is to be apportioned: 65% factory, 35% office. 65% factory. Factory will be production overhead or factory overhead. 35 will go to the P&L section, profit and loss section. Okay, this is admin related, office related. On 31st March 25, Grace owed $13.15 for factory power and $2,000 for factory supervisors wages. There's an outstanding. For the factory power, 13.15 being the outstanding and 2,000 being the outstanding for the factory supervisor. Here 2,000. Factory equipment is depreciated at 20% per annum using reducing balance method. Factory equipment 20% using reducing balance method. From the cost, provision for depreciation is subtracted. On that balance, 20% will be calculated. On that balance, 20% will be calculated. This is the logic. Right. Let me start with the manufacturing code. Raw material will come, work in progress will come, purchase of raw material and carriage inward will come, and wages related to the factory, all the expenses related to the factory will come under manufacturing account. So these two. And in case of rent and insurance, only the 65% will come. Factory power will come. Factory equipment, this is also will come, but only for the depreciation. The depreciation will come. Right. Now, cost of material consumed. Cost of material consumed. Cost of material consumed. Raw material consumed. Okay. Start with opening stock of raw material. Opening stock of raw material. Opening inventory of raw material. Okay. How much is that? 53.45. Add purchases of raw material, not finished goods, only raw material. This one is over. Now this one. Purchases of raw material. 72,870. If there is any carriage in, that should also be added. Part of it. Carriage in. Carriage inwards. For raw material. Not for the finished goods. And the total value being 79,435 minus closing inventory. Closing inventory of raw material. Closing inventory of raw material. Here is 7,100 and this will also come. So here 7,100. If I subtract, then I will get cost of raw material consumed 72,335. Now you have to add direct wages. Direct wages. Okay. Factory operative. Direct wages. Direct wages will be a part of this one. Operative purpose, no, then it will be a part of this one. In case of supervisor, this will be overhead. Factory operation purpose, if you pay any wages, that will be called as direct wages. Other than that, any machine supervisor, like the wages payable will be named as overhead. So here 29,175 will come. So if I add up all this value, 1,01,510 you will be getting, that's called primary cost or prime cost. Now we have to add the factory overhead. All the costs meant for overhead, means factory purpose, will be grouped here. Factory overhead. In all these cases, wherever you find the factory term, automatically you can post here, but don't get confused with this factory and this factory. Factory supervisor wages. Okay. Wages for factory supervisor. Factory supervisor. This value being 24 plus 2,000, 26,000. And here is also factory power and rent and insurance up to this percentage. Rent and insurance. Rent and insurance. 65% of this 12,000. 7,800 will come here. Okay. Then factory power. Factory power. You have to add this value. 14,120 plus 13,15. 15,435. And depreciation. Equipment depreciation. Equipment depreciation. 180 minus 64,800 on the 20%. 2340. 23,040. And we have work in progress only. So we'll finish up this cost. 72,275. If I add up these two costs, 1,73,785. After that, work in progress cost will be adjusted. Here opening work in progress cost you know should be added. So opening work in progress WIP 13,820. Now this value being 1,87,605 minus closing work in progress. Closing work in progress here being 14,390. If I subtract, then I will get 1,73,215 being cost of production. Cost of production. Okay. From here onwards, you can proceed with the trading section. Trading section. In question number 2, the following information was provided by G Limited, a manufacturing company, for the year ended 31st March 2024. And inventory in the beginning and the end given. Prepare manufacturing account and prepare trading section of the income statement. G Limited apply a standard rate of markup being 35%. Markup being 35%. Factory machinery is to be depreciated at the rate of 15% using reducing balance method. So let me mark down all the adjustments here before I proceed to solve this illustration. Now, factory machine, on this value you have to calculate at the rate of 15%. Depreciation being 15%. As it is related to the factory, this depreciation will be forming part of the manufacturing account. On 31st March 24, rates $620 were OV. So rates 620 will be addable as it is being the outstanding. Rates and insurance are to be apportioned in the ratio of 60 and 40 to factory and office. So 60 will go to the factory and 40 will go to the office. And apart from that, we have been given the materials here, opening and closing. These are the inventories we have been given in the year beginning and year end. Let's identify the items for factory manufacturing account. This will be manufacturing account. This will be trading section. This will be manufacturing, trading. This will be administration salary. Where will it come? This will come under profit and loss section, but I am not going to prepare that here. Factory manufacturing. Provision for depreciation. This will come under factory. Factory general expenses. Rates. This part will be in factory. This part will be in the P&L section. P&L section. Administration expenses. P&L section. Carriage and purchase of finished goods. Okay, where will it come? Trading section. Carriage and purchase of raw material will be part of manufacturing section. In case of finished goods, it's a trading section. Royalty, direct expenses, like this is called direct expenses, coming under manufacturing cost. Okay, let's start with the cost of material consumed. Cost of material consumed. Cost of material consumed. Okay. Under that, we'll start with the opening inventory of raw material. Opening inventory of raw material. 18,200. Add purchases of raw material. Raw material. Here is 68,000. Do we have carriage on purchases of raw material? No. To confuse you, they have given carriage on purchase of finished goods. That will be a trading section item, not here. Now the total be 86,200. From there, you have to subtract closing inventory of raw material. Closing inventory of raw material 19,280. If I subtract, then the value being 66,920. You have to add direct wages. Factory operative wages will be called as direct wages. This one 1,83,700. Not only that, royalty will be called as direct expenses. Will be addable here. Royalty 3,240. If I add up the above three, then it will be named as prime cost. Prime cost. The prime cost in this case being 2,53,860. 860. Then you have to add the factory overhead. All the items related to the administration of factory or running a factory will be called as factory overhead. You can now add those items here. So here is factory. This will be depreciation, right? 2,47,000 minus 51,500 into 15%. You have to subtract this. On that balance, you have to calculate 15%. Depreciation on machinery. Depreciation on machinery. And this value being 29,325. 29,325. And again, we have factory here, manufacturing. Okay, this one is okay. This one is also okay. Factory general expenses. Factory general expenses being 20,250. In rates and insurance, only to the extent of factory will be taken here. Rates and insurance related to the factory. You add up these two, on that 60% will be transferable here. 4632. And factory supervisor is a factory overhead. I missed. This is factory overhead. Okay. Wages. Whenever the term factory is there, no, automatically comes in the factory. Wages. Factory supervisor. This value being 47,200. And we have everything now ticked. That's all. So 4 items in total being 1,01,407. If you add up this value being 3,55,267. Now with that, you have to add work in progress. Okay. Opening work in progress 23,400. And you have to subtract the closing work in progress. So after adding this, the value being 3,78,667 minus closing work in progress. Closing work in progress here being 22,650. Then cost of production you will be getting. Cost of production. This value being 3,56,017. Now we have to prepare income statement. Trading section. In case of trading section, what will come? Only finished goods items will come. Okay. We have been given finished goods of purchases, and what more we'll have. This one, two items are there for trading section. These two items only, and this also be in the P&L section, so it will not come. So this one, finished goods purchases, will come, and carriage and purchase of finished goods will also come. Rest will not come, so I'll eliminate to make the space available for me to work out the next one. Okay. Now this will be the purchases. Start with the income statement, trading section. Income statement. Okay, under that trading section. Okay, we start with the revenue, sales. There is a sales here. Yeah, markup information is given, which is 35% markup. So I will calculate that later on. Revenue less cost of sales. Cost of sales. So in cost of sales, opening inventory of finished goods 6,820. Purchases of finished goods 2,180. And cost of production, the finished goods produced by ourselves. For that, the cost is identified here, will also be addable here. 3,56,017. Carriage on purchases will also be forming part of this. Carriage on purchases 21. Oh, purchases is this one and carriage and purchases is this one. Okay, I'll just correct this. You can better club these two and write as a single number. 32,430. You can add up these two and show this as a single number. Then total value being 3,97,430 minus closing inventory of finished goods. Closing inventory of finished goods 9,350. Then your overall cost being 3,88,080. And finally you will get the gross profit. And revenue. We know that if the cost being 100, markup being 35, then your revenue should be 135 rupees. Is that okay? 35% markup is there. If the cost being 100 and gross profit should be 35%. So you have to find out 35% on this. The value being 1,35,828. If you add up these two, that will be the revenue. 5,23,908 will be your revenue. Okay, with that, income statement is over. Now we'll move on to the question number 3. Toya owns a factory which makes doll houses, and her ledgers are given here. Okay, making automatically, you have to remember manufacturing account will be prepaid, and we have been given inventories also. These are the closing inventory. closing inventory. What are the other adjustments? Rates and insurance are to be apportioned 2/3 to factory, 1/3 to office. Okay, rates and insurance 2/3 factory, 1/3 for office. At 31st January 24, general factory expenses $235 were unpaid. Unpaid should be addable. General factory expenses add 235. 235. Factory machinery is depreciated at 25% per annum using reducing balance method. Factory machinery. You have to subtract this, and on that 25% will be calculated. Reducing balance method. Everything is incorporated in the one single page itself. Prepare manufacturing account. Income statement trading section. Factory produces this much of dolls, 6,936, and from this you can calculate cost of each doll houses, nearest dollar. So you can round off to the nearest dollar. So we can finish up that last calculation finally. So inventory, raw material, manufacturing. This is trading section. This is trading section. Purchase of raw materials, manufacturing, wages, manufacturing, factory operative. So under the wages, this will be manufacturing. This is factory sales staff, P&L account, factory electricity, factory overhead, rates and insurance. This part will come, and general factory expenses, factory, and of course rest will be there. And this is also factory. This is factory. This is trading section. Right. We'll start with the raw material consumption. Cost of raw material consumption. Cost of raw material consumed. Okay. Opening inventory. Opening inventory of raw material 12,400. Add purchases of inventory raw material 1,43,000 minus the total being 1,55,400 minus closing inventory of raw material 11,205 11,205 and material cost here being 1,44,195 and wages, direct wages 51,000. We don't have the royalty, so the total being prime cost. The prime cost in this case being 1,95,195. You have to add factory overhead with this. Under the factory overhead, whatever the terms we have with the factory will come here. So factory supervisor wages, 19,000, and the factory supervisor over factory electricity, the value being 16,000. Rates and insurance only 2/3. Rates and insurance, you have to calculate only 2/3 and write 16,200. 2/3 on that being 10,800. General factory expenses, you have to add up these two and post that value 6,390 And machinery depreciation. Machinery depreciation. 1,20,000 minus 52,500. On that value, you have to find out 25%. 16,875. The total factory overhead being 69,065. If you add up this with the prime cost, the total value being 2,64,260. Now you have to add and subtract the work in progress stock, inventory, opening work in progress. Opening work in progress 16,970. So after adding that, the value being 2,81,230 minus closing work in progress 17,682. Then the value what you get here is called cost of production. 2,63,548. Apart from that, we have to prepare income statement, especially trading section also. Okay, income statement. Income statement. Trading section. Trading section. Revenue. Revenue is given here 3,90,100 minus cost of sales. Under that, opening inventory of what? Finished goods. Opening inventory of finished goods being 14,825. Add cost of production. Cost of production. You don't purchase it from outside. The item produced in the factory will be transferred from factory to trading section. 2,63,548. Total being 2,78,373 minus closing inventory of finished goods. Closing inventory. Closing inventory of finished goods here being 13,480. So finally 2,64,893. If I subtract the cost of sales from revenue, I'll get the gross profit here. So gross profit. Gross profit. 1,25,207. Finally, one more question. 6,936 dolls produced, and you have to calculate cost of each doll. This entire amount is for producing 6,936 dolls. So the cost of production, the total value is divided by this one to find out the cost per doll. $38, round off to the nearest whole dollar. Okay, $38. Question number 4. Hillary owns manufacturing business. She has provided the following information and additional information. So you have to prepare manufacturing account and you have to calculate the gross profit. To calculate the gross profit, of course, you have to prepare the trading section. So 11 plus 4, 15 marks. Let's now start. Particulars. And we have been given the inventories. These three are closing inventory. These are the closing inventories. And I just mark all the adjustments. Heat, light and power is to be apportioned. 4/5 factory, 1/5 office. Heat, light, power. 4/5 for factory. For factory. Balance 1/5 will be for office. But anyhow, office will not be prepared for us. Rates and insurance is to be apportioned 3/5 to factory, 2/5 to the office. Insurance of $4,440 has been paid for the for the year 31st December 23. Okay, has been paid for the year to 31st December. Now we have to complete our preparation up to this date. So 4,440 is for 12 months. Okay, 12 months. And the payment is up to 31st December. 31st December 23 means 1st January 23 onwards. For this period, we have paid this much. But our accounts are getting closed on 31st July 23. From this, it is very clear, to this extent we paid in advance. Advance should be removed. How many months are there? 8, 9, 10, 11, 12. So 5 months are there. So you have to find out the 5 months value. So 5 by 12, that will be called as your advance. How much is that? How much is that? $1,850. This will be the advance, so it should be subtracted from this one, minus $1,850. Apart from that, in that 350 is for the factory. 350 is for the factory. On 31st July 23, a factory repair $644 was unpaid and no adjustment had been made. Factory repaid. Here is unpaid, 644 should be addable. Factory equipment is depreciated at 25% per annum using reducing balance method. Factory equipment, from the cost you have to subtract this one, on that 25% of depreciation will be calculated. This one is also factory, this one is also factory, and raw material factory, work in progress factory, trading section, revenue trading section, purchase of raw material factory, purchases returns of raw materials, so factory it should be deducted from the purchases, purchase of finished goods trading section, purchases returns of finished goods trading section, you have to subtract this one. Okay, from here these two are going to be adjusted. Wages for factory operator, factory supervisor, trading section, sorry, factory operator, operatives means direct expenses. Okay, direct wages, that means factory. Wages of factory supervisor, factory, this is direct expenses, that wages, right? Wages of office supervisor, P&L section, we never bother about that one. So here 1/5 also, office section, we never bother about this now, also not considered. That's all. We'll start with the manufacturing count here. Manufacturing count. Okay. Cost of raw material consumed. Cost of raw material consumed. Under that, opening inventory of raw material. Opening inventory of raw material 9,100. Add purchases of raw material. In case of purchase of raw material, there's a return should be subtracted. So 1,10,000 minus 2,200. After that, the final value being 1,07,800. And total value being 1,16,900 minus closing inventory of raw material. Closing inventory of raw material. Here is 9,980. Should be subtracted. Should be subtracted. Then the value being 1,06,920. Direct wages and royalty, if any, will be addable. Factory operative will be called as direct wages. So this one, 91,665. If I add, then this will be the primary cost, named as prime cost, 1,98,585, and factory overhead. Anything related to the factory expenses will have the term factory. Automatically you can guess easily that it will come here. Now we have factory here. Wages for factory supervisor. 29,000. Heat, light and power. But out of that only 4/5 will be taken. So 11,600 into 4/5, 9,280. Rates and insurance on that, you have to first subtract this value. On that 3/5 will be taken, rates and insurance. 3,840. And factory repairs and renewals, so you have to add 644 and then post here repairs and renewals related to the factory, repairs and renewal, the value being 5,769. Factory depreciation, the equipment depreciation from 124, 35, 500 is subtracted. On that 25% will be taken, this value being 22,125. Then overall value being 70,014. From the prime cost, if I add the factory overhead, the total value being 2,68,599. So you have to add opening work in progress with this. Opening work in progress here being 21,357. Then 2,89,956 minus closing work in progress 22,446. Then ultimately we will be getting cost of production. 2,67,510. To find out the gross profit, I had to go for revenue section, means trading section, income statement. So income statement, under that revenue section, trading section to be prepared. Okay. Under that, revenue being the sales here, so 4,57,250 minus cost of sales. Under cost of sales, opening inventory of finished goods, 24,235, and add purchases of finished goods, where returns, if any, should be subtracted. Purchases being 1,23,500 minus 4,700, and the item produced and cost calculated under manufacturing account should also be transferred. So here this value being 18,800. Not only purchases, predominantly we are manufacturing, so cost of sales, cost of production 2,67,510. I transfer from here, and then we don't have anything other than that for the trading section, so you can subtract the finished goods closing. So the total value here being 3,10,000 3,10,545. Add opening inventory of finished goods. Sorry, closing inventory. Sorry. Okay. Closing inventory of finished goods. Closing inventory of finished goods in this case being 25,110. 25,110. Then overall value being 2,85,435 is the cost of sales. From the revenue, if cost of sales is subtracted, then balance will be the gross profit. The gross profit in this case being 1,71,850. 850. Okay. So with that, this illustration is over. So now let's move on to the question number 5. Sarah owns a clothing factory. She sells the clothes to a small number of local shops. She allows 30 days credit. 30th September 23, Sarah's ledger account balances included the following. So these are the balance given in the trial balance, means ledger accounts. And we have been given the closing inventories also. Now what are the things are going to be prepared here? Prepare Sarah's manufacturing account and prepare current assets section of Sarah's statement of financial position. You have to prepare current asset section. Right. On 30th September 23, general factory expenses $335 were unpaid. General factory. So unpaid, you have to add that. Okay. 335. And this should be payable. No, then it's a current liabilities. Insurance 8,000 had been paid for the year July 23 to June 24. The payment being 1st July 2023 to applicable up to 30th June 24. And year ends on 30th September 23. So the payment for this period seems to be in advance. This will be the other receivables, current assets. How many months? 9 months, right? So 9 months in advance. Now this 8,000 rupees into 9 by 12. 6,000 will be the advance amount. In case of insurance, I have to subtract minus 6,000 as you paid in advance. This will be part of current assets. Because we have to prepare current account section, current assets section, I note the current assets also simultaneously. Rates and insurance are to be apportioned equally between factory and office. Okay, rates and insurance. So, where half only for factory. And then factory machinery is depreciated at the rate of 25% per annum using reducing balance method. Whatever the cost you know, from there accumulated depreciation is subtracted, balance on that 25% depreciation will be calculated. So I have to prepare manufacturing account. So these are the manufacturing account item. Okay. Wages under that, this is machine operator wages. Delivery vehicle related to the sale. So while selling, the goods are going to be delivered at the customer site. It's a selling and distribution expenses. This will not come. Factory supervisor will be the factory item. Rates and insurance. factory to the extent of half, general factory, factory to the extent of uh, after adding the current liabilities, factory machinery where this depreciation will be the factory item, trade receivable being current assets. This is current assets, and this will also be current assets. These three will also be current assets. Is that okay? Now let's finish up manufacturing account first of all. Manufacturing account. I start with the cost of material consumed. Cost of material consumed. Under that, we start with the raw material. Opening inventory of raw material. Opening inventory of raw material 4875. Add purchases of raw material. Purchases of raw material 56400 and 61275 minus closing inventory of raw material 5110, this one. Then raw material consumption being 56,165. Then you have to add the direct wages. Machine operators wages will be the direct wages, so 43,300. Now you will get the prime cost 99,465 will be the prime cost. Will be the prime cost. Now you have to add factory overhead here. Factory overhead. Under that, wherever we have the term factory, I can post wages for factory supervisor. Factory supervisor 25,000. And rates and insurance. Rates and insurance related to the factory being, you have to subtract 6,000. On that, half will be taken, 23 and a half means 11,800. Factory general expenses. General expenses. You have to add 335 with 9,650. 9985. 9985. Then you have to find out the depreciation. Depreciation. You have to subtract 35,000 from 10,000. On that, 25% will be calculated, which is 11,250. Overall factory overhead being 58,035. If I add the factory overhead with the prime cost, I'll get total value here being 1,57,500. Add opening work in progress with this. Opening work in progress being 8,125. Okay. 1,65,625. Less closing work in progress, you have to subtract that one, which is 7,365. Then finally you will get cost of production. Cost of production 1,58,260. Now I'll start with this current account section, current assets section in statement of financial position. Statement of financial position. Under that, current assets section. Current assets, okay. What are the current assets we have? Especially inventory. We have three kinds of inventory being the manufacturer. Inventory. Closing inventory will come here. Raw material 5110. Work in progress 7365. Finished goods 13,725. Here we have the trade receivables, which is 27,000. and cash at bank 1050. This amount 6000 will be named as other receivables. Other receivables 6000. These are receivables, these are inventory. And if I total this 60,250 will be the total of current assets in your financial position statement. Now let's move to the next question, question number 6. TC Limited is manufacturing company. The company's year end is 31st January. The company's ledger account balances included the following. Let's see. Now, here particulars given and closing assets, closing inventories given. What are the requirements to be carried over or prepared here? Prepare rent and rates account. So here we have to prepare rent and rates account and balance and bring down the balances, as well as you have to prepare the manufacturing account. Manufacturing account carries 10 marks and rent and rates carries only 5 marks. Okay, one of the interesting case. Okay, let's see. As usual, first, what are the adjustments are there? Factory equipment is to be depreciated at the rate of 20% per annum on reducing balance method. So here from this, if you subtract this value, on that 20% will be calculated. And then next one, in December 2020, $3,600 was paid for rent for the period of 1st December to 28th February. 1st December 20 to 28th February 21. Year ends on 31st January 21. So you have paid this money for this period, but okay, 1st December to 28th February. How many years? December to 28th February. In December we have 1 month. In 21 January, February. So December, January and February. December, January, February. For the 3 months the payment is done. For this it is 3,600 and we close the books of accounts on the date. After that date, how many months are there? Okay. January and February, 2 months. Here only. So January last date now, you cannot take that. So only 1 month. So here 2 months. Out of 3 months, 1 month value will be in advance. So into 1 by 3, 1200 being the advance. Related to the rent, advance minus 1200. Okay. At 31st January 21, rates 550 were unpaid. Rates 550 unpaid. Minus 550 unpaid. Right. So rent is paid in advance. Rates is outstanding. Rates is outstanding. Rent and rates are to be apportioned equally between factory and office. Apportioned in the ratio of 1:1 for factory and office. And insurance is to be apportioned 75% to factory and 25% office for insurance. 75% for factory and 25% for office. Is that okay? So we'll prepare first of all manufacturing account as usual. So this will come under manufacturing. This is trading section. Purchases manufacturing. And purchases of raw material will be manufacturing, not finished goods. Wages related to the factory being the direct wages, and factory supervisor, factory rates and insurance, only 1/2 will be your factory related. Another 75% will be related to the factory. Factory carriage inward on raw material, carriage inward on raw material being manufacturing, factory equipment at cost. Okay, this will be factory. And these two will also come under this. First one is manufacturing, means manufacturing first part, work in progress will be second part. Now you'll be able to understand this part here. Let's start. I'll prepare the rates and rent and rates account later on. Let me finish up first of all manufacturing code. Manufacturing code. Manufacturing code. Okay. We'll start with the opening inventory. Opening inventory of raw material. 7,500. Add purchases of raw material. Purchases of raw materials. 91,400. 91,400. Okay. Carriage inward, M, manufacturing related, should be addable here. Carriage inward, 6,280. Total value being 1,05,180 minus closing inventory. Closing inventory of raw material. Here is 8,000. That should be subtracted. Then final value being 97,180. And direct wages. This one being the direct wages, 52,000. And what more? We don't have any other things other than that. So 52,000. You'll get the prime cost here. Prime cost. The prime cost in this case being 1,49,180. And you have to add the factory overhead with this. Factory overhead. Under that, all the terms started with factory having the prefix or suffix factory will come here. Factory supervisor wages. So wages for factory supervisor 2,300. Rent and rates. You need to add 550, subtract 1,200. After doing this addition subtraction, half will be for factory rent and rates. Rent and rates. Okay. This value being 9,485. In case of insurance, 75% of this will be transferable, 3,450. General factory expenses. This value being 4,200. And this one is already posted. And depreciation. Equipment depreciation. 90 minus 30,960 on the 20% will be 11,808. Overall value 52,043. If I add this with the prime cost, the total value being 2,01,223. Add opening work in progress. That one is given here, 11,220. Then this value being 2,12,443 minus closing work in progress 11,900. If I subtract, then the ultimate value being the cost of production 2,543,000. Hope now you'll be able to understand this one. Now we have to prepare rent and rates account. Rent and rates account, like normal expenses, other payables account, like this will appear. Let's see. I'll prepare here. Okay. Now, rent and rates. Rent and rates. Similar to other receivables and payables, like. Okay. What happens if I have opening balance? Balance means outstanding and advance will be posted here. Balance brought down. Balance brought down. Of course, we usually don't have the opening balances, only closing balances. Balance carry down and balance brought down, carry down. If it appears in the credit side, what does it mean? It's a liability. As this being the expenses, if supposed to pay outstanding, then it's a liability. If you pay in advance, then it's asset. Okay. Whenever the payment for this or amount increasing, that will be posted in the debit side. If you are making the payment, the amount payable to the rent and rates, the overall value for the rent and rates expenses is increasing. Okay. Bank. When it is going to be reducing? On transferring this to the income statement. On transferring to the income statement. But this rent and rates not only transferable to the income statement, only one half is transferable to the income statement P&L section. Another one half is transferable to the manufacturing section. So I name this being manufacturing account. You understand? That one difference you have to understand. Manufacturing account. Rest will be the same. Now 550 outstanding 550, then liability. So I put that value here, 550. Minus means is an advance being the asset. I have to post that here. Out of that, how much is transferred to factory? The amount transferred to factory being 9485. Amount transferable to the manufacturing account 9485 means another half is transferable to the income statement. And if I tally, then the total value being 20,170, this value being 19,620, balancing figure. Instead of naming this being bank, you can name this being total to date. Up to this date, how much amount is spent, you can write this way. And don't forget to rewrite this the next side also. Balance brought down 550, and this will be here balance brought down 1200. Balance brought down 1200. Clear? Now let's move on to the question number 7. Salman owns a footwear factory. He sells to all the 3 local shops. Salman prepares his financial statement. Salman's ledger account. Okay. So he has a footwear factory. You have to prepare the manufacturing account for his footwear factory also. Okay. Now what are the requirements are there? Salman's manufacturing account and trading section only. So these are the 2 ledgers are going to be prepared. and we have been given the inventory at the year end. Now Salman applies 50% markup to his cost of sales. Okay, markup being 50%. Right. Rates and insurance are to be apportioned 3/4 to the factory, 1/4 to the office. 3/4 to factory. And factory electricity 1048 was unpaid. Electricity 1048 should be addable. And factory equipment is depreciated at 20% per annum using reducing balance method. So if you subtract this value from here, on this balance 20% will be the depreciation. Is that okay? Sum is pretty simple as usual. I am going to repeat this. Okay. Manufacturing account. Manufacturing account. Manufacturing account. Under that, cost of raw material consumption are consumed. Cost of raw material consumed. Under that, opening inventory of raw material. Opening inventory of raw material 8190. Add purchases. Purchases of raw material being 78,420. We don't have any carriage in our purchase return. You can directly write it here, 78,420. Total being 86,610 minus closing inventory of raw material 8,000 rupees is going to be subtracted. After subtraction, the value being 78,610, and this one is over. This will not come. Wages, under that factory supervisor will come. That is called not factory supervisor, factory operatives will come. Okay. Add direct wages 52,396. If I add, then the value being 1,31,006. In this point, we call this cost being prime cost. Hereafter, you have to add factory related expenses commonly named as factory overhead. Here is factory supervisor wages. Wages for factory supervisor 27,500. Rates and insurance on the 3/4 will be taken here. Rates and insurance 3/4 on 17,528, 13,146. Factory electricity you have to add this outstanding also with that, then the value being 12,490. General factory expenses 8,244, and equipment depreciation. If you subtract this provision for depreciation, the balance on that 20% will be calculated 9216. That's all. The total value being 70,596. If I add up these two, this value being 2,01,602. Add opening work in progress. Here is 15,200. 2,16,802. 2,16,802 minus closing work in progress 16,100. Then cost of production. Cost of production here being 2,702. Then we have to go for income statement trading section. Income statement trading section. Trading section. I start with revenue, sales revenue. Of course, sales revenue information is missing because we have been given markup cost. So from there, cost of sales is subtracted. Here, opening inventory of finished goods, which is 23,860. Add purchases of finished goods, yeah, given here. Purchases of finished goods 9144, and item manufactured in the factory also be transferred. Cost of production, this will be 2,702, 2,702. Then if I add up this value, this will be 3,14,706. Closing finished goods will be subtracted. Closing inventory on finished goods, closing inventory of finished goods 24,590. Then cost of sales being 2,90,116. This is cost of sales. And margin should be gross margin, gross profit. Okay. You know that revenue, cost, gross profit, and then revenue. If the cost is 100 and your markup being 50, revenue should be 150. We have been given the cost of sales 2,90,116 and 50% on that being 1,45,058. If you add up these two, the revenue will be 4,35,174. Okay, that's all. Question number 8. Pari owns a clothing factory. Okay, maybe the manufacture happens there. You have to prepare manufacturing account. Whenever you come across factory, you immediately guess it should be a manufacturing account. And we have been given closing inventories also. All the three forms of inventories given. So what to do? Prepare manufacturing account, income statement, trading section only. Rates and insurance are to be apportioned equally between factory and office. So rates and insurance 1:1. One is for factory. General factory expenses $500 were unpaid. General factory. So there is unpaid 500 rupees. $500. Factory equipment is depreciated at the rate of 20% using reducing balance method. So you subtract this one, and on that 50% will be, 20% will be the depreciation. So manufacturing first block and factory, this is trading section, purchase of raw material, manufacturing, direct wages, and factory, this is factory. Office will not come. Rates and insurance, only this portion will come. General factory, and this will be depreciation will come. These two are factory and this one is for trading section. Now manufacturing code. Under manufacturing account, we will start with Cost of raw material consumed. Cost of raw material consumed. Cost of raw material consumed. Opening inventory of raw material. Okay. 6100. Add purchases of raw material. 84,200. Total 90,300. Minus closing inventory of raw material. Closing inventory of raw material. 6,840. If we subtract, then the value being 83,460. You have to add direct wages with this. Direct wages. So here factory operatives will be the direct wages, 33,000. After adding 1,16,460 is called prime cost, and add factory related overheads. Factory overhead in short. Under that, wherever I use the F no, that will come here. Factory supervisor wages. Wages for factory supervisor 26,000. And rates and insurance. Rates and insurance. Out of 14, half will be taken, 7,000. General factory expenses. 11,500. With that 500 should be added, so 12,000. And factory depreciation. 1 lakh minus 36,000, on that 20% will come here, 12,800. 57,800. If I subtract the factory overhead from the prime cost, means if you add this with the prime cost, the total being 1,74,260. Add opening work in progress. Opening work in progress being 9,420 should be added. Then the ultimate value being 1,83,680 minus closing work in progress 9,885 is subtracted. Then ultimate value being 1,73,795. This is cost of production. Cost of production. Also, we have to prepare the revenue, trading section in income statement. Trading section. Income statement. Trading section. Right. Here we start with the revenue. Revenue being 2,30,020 minus cost of sales. Under that, opening inventory of finished goods, which is 11,350. Add purchases of finished goods if any. No, not given. Only the produced items will be sold here. So add cost of production. 1,73,795. 1,85,145 minus closing inventory of finished goods 12,630. Then cost of sales being 1,72,515. If I subtract this cost of sales from the revenue, I will get the gross profit. Gross profit being 57,505. Apart from that, in this illustration, they have asked to calculate the gross profit margin also, GP margin. GP margin. In case of gross profit margin, gross profit by revenue will be taken, sales will be taken. So, gross profit being 57,505, revenue being 2,30,020. In percentage, the final answer being 25%. 25%. With that, this illustration is over. Now we'll move on to the next one. Ninth question. One of the comprehensive illustrations. Let's start. Okay. Slightly adjust this. Yeah. Now, on 31st July 21, rates 500 were prepaid. Year end being this one, so prepaid is there in rates. Okay. Rates prepaid. That will be subtracted. 75% is for factory. So you have to prepare manufacturing account and trading section of the income statement. So only 75% it matters for us. And on 31st July 21, factory general overheads 230 were accrued. Also outstanding 230 should be added. Factory machinery is to be depreciated at the rate of 20% per annum using reducing balance method. And in this factory machinery, subtract the provision for depreciation and then calculate 20%. That's all. So we can calculate the manufacturing account here. Manufacturing account. Okay. We start with cost of material consumed. Cost of material consumed. And we start with opening inventory of raw material. What we have, raw materials will come in manufacturing, work in progress, factory, finished goods, trading section, purchases, manufacturing, raw material. First part of the manufacturing, I name this being M. Raw materials. In purchases, we have the raw materials. This will be manufacturing. Finished goods being the trading section. Carriage and purchasing being manufacturing will be part of the raw materials cost. Okay, in carriage and purchases, you know, this will be for raw material. Raw material will be includable with the raw material cost. Finished goods will be includable with the finished goods cost in trading section. Direct wages, part of manufacturing. Indirect factory machinery cost. This is depreciation. The depreciation will go to the factory. General overheads, factory rates 75% will go to the factory. And raw material will be manufacturing. This will be factory. Finished goods will go to the trading section. Okay. Revenue will also be trading section. Opening stock of raw materials 5,820. Add purchases. Purchases of raw material being 34,200. and carriage on purchases should be addable. Carriage on purchases of raw material. Carriage in 410 should be addable. So purchased item value being 34,610. Now the total value being 40,430 minus closing inventory of raw material. Closing inventory of raw material 60/30, 60/30, 34,400, 34,400. With that, direct wages should be addable. Direct wages here being, here is 67,200. Then prime cost 1,01,600, 1,01,600. Factory overhead, factory related. Okay, here is indirect factory wages. Indirect factory wages, the value being 24,000. And depreciation, machinery depreciation, from 47,11 is subtracted 36 on that 20%, 7,200. And factory general overheads, general factory overhead 16,400. With that, 360 should be 230 should be addable. 16,630. Then rates, from 5,300, 500 subtracted on that, only 75% will be calculated, 3,600. That's all. So the 4 items in total 51,430. If I add the prime cost with the factory overhead, the total being 1,53,030. Add opening work in progress 1,750, 1,54,780 minus closing work in progress. Closing work in progress in this case being 2,780 should be subtracted. Then cost of production being 1,52,000. Cost of production. Now income statement, trading section. Income statement, I start with the trading section. Trading section. Here start with the revenue 2,23,000 minus cost of sales. Under cost of sales, opening inventory of finished goods. Opening inventory of finished goods 12,360. Add purchases of finished goods. Purchases of finished goods 3,900. Add cost of production. The goods manufactured in the factory should also be transferred. Cost of production 1,52,000. Carriage on finished goods. Carriage in for finished goods. This is for raw material, right? 80 rupees. Then overall value being 1,68,340 minus closing inventory of finished goods which is 10,340. Then the ultimate value being 1,58,000. If I subtract this 1,58,000 from 2,23,000, the gross profit being 65,000. Gross profit. Okay.